Are you ready to get started in the world of crypto? You may have heard of Bitcoin, Ethereum, and other cryptocurrencies, and getting started may seem overwhelming. However, in today's video, I'll walk you through the essential steps to getting started with crypto trading as a beginner. What exactly is crypto trading? Crypto trading involves buying and selling digital assets like Bitcoin, Ethereum, and many other altcoins. Unlike traditional stock markets, crypto markets are decentralized and operate 24/7. Traders make profits by buying at low prices and selling at high prices. Crypto trading can be done on various exchanges, and prices fluctuate based on supply, demand, news events, and market sentiment. Now, to start trading, you need access to a crypto exchange. These platforms allow you to buy, sell, hold digital assets, and more. Some of the most popular exchanges for beginners are Coinbase, Binance, and Kraken. When choosing an exchange, consider factors like user-friendliness, security, and fees. And of course, make sure that the exchange you choose is reputable and secure. Many exchanges require you to verify your identity to comply with regulations. Now, once you've chosen your exchange, what you want to do is now you want to set up your account. Most exchanges will require your personal details like your email, phone number, and personal identification document for verification. After verifying, what you'll want to do is you want to link your bank account or your credit card to fund your crypto wallet. Many platforms offer options to fund your account with fiat currency or transfer crypto from other wallets. Now, before you start trading, what you'll want to do is you want a crypto wallet to store your assets. There are two types of wallets. One is the hot wallet and one is a cold wallet. A hot wallet is connected to the internet, making it easier to trade but less secure, while a cold wallet is an offline storage option perfect for long-term investors looking for more security. For beginners, a hot wallet provided by your exchange should be sufficient for daily trades. However, if you're planning to hold large amounts of crypto, consider using a cold wallet for better security. Now that you have everything set up, let's talk about some basic strategies to get you started. So first off is the dollar cost averaging. This involves buying a fixed dollar amount of cryptocurrency at regular intervals, regardless of the price. It's a great strategy for reducing the impact of market volatility. Another strategy is very simple. It's called just holding, right? So you buy a large amount of crypto or a small amount, whatever your budget is, and you hold it for a long period of time, hoping it'll increase in value. And you want to ignore short-term fluctuations, and many long-term investors see significant gains using the strategy, especially with crypto like Bitcoin and Ethereum. It's worth noting that the crypto market is very volatile, and managing your risk is crucial. Always set stop-loss orders to limit potential losses on a trade, and diversify your portfolio by investing in multiple cryptocurrencies instead of putting all your money in one particular asset. And of course, never invest more than you can actually afford to lose. And make sure to regularly check the market and news for any updates that could impact prices. Finally, following and staying updated with market trends can help you catch new opportunities faster. Following reliable crypto news platforms like CoinMarketCap or TradingView to track price movements and volume is essential. Many traders also use Twitter, Reddit, and Telegram to keep up with the market sentiment as well. The crypto world moves fast, and being informed will help you make better trading decisions. So that's it for our beginner guide on crypto trading. Remember, the key to success is starting small, learning as you go, and managing your risk. If you found this video helpful, don't forget to like, subscribe, and visit bitcoin.net for more detailed guides on crypto trading.